Welcome to this month's newsletter. Today is January 31st. Looking at the Nifty extremely bullish trend as we said in the last newsletter. Look at the nice movement of the Chicago, unbroken momentum here. Keep in mind now that we are a little bit away from the Kijun and the Tenkan. So even though we don't have a candlestick reversal signal here, we could have just a consolidation. But again, if you are in the markets actively trading, I would not recommend shorting anything at this point. Just liquidating your taking profits of the positions and waiting for some good buying opportunities. Notice here that you do have a hanging man, but that was negated the day after, and this one is not a candlestick reversal signal anyway. So just the fact that it's a little bit away from the Kijun might trigger some consolidation here. But we are still in a bullish trend, and you should continue to hold bullish positions if your positions are still looking good. Let's look at some stocks. Tata Steel. Tata Steel still looking good. Nice move up here above these levels. Moving sideways, letting the Kijun catch up. At this point, I would look for this to start moving up. And I would not hesitate to rebuy this stock if it closes above these highs here, especially about 784, 785. They can close it up there. That should trigger another buying signal in this one. Looking good here. Looking at L&T. Again, a nice breakout of Chicago breakout strategy, looking good as far as momentum is concerned, and nicely using the Kijun as support. At this point, I would continue to hold the position. Don't want to see any trading below the Kijun. Let's see, sale. This one you might want to take profits at this point. If you did buy on the Chicago breakout, now might be a good time to take your position off. Again, is this a reversal? I wouldn't say it's a complete reversal at this point. I wouldn't be shorting it. However, you do need to liquidate your position if since it has closed below the Kijun, it might have some minor consolidation going on here. So, and if you notice, the Chicago is going to be below the candles pretty soon. So I would take profits off this stock and move on to the others. BEML. BEML is a stock sitting on support at this point. Aggressive buyers, those who are only following candlesticks, probably can get in here with piercing signal confirmed. If you can see confirmation here, that can trigger buying because it is sitting on a double bottom formation, rather a potential double bottom, right where you had a previous spinning top. So your next target might be your Kijun or even up to your Kumo. So that is only for aggressive buyers. We are below the Kumo and below the Kijun Tenkan. So if you're following Ichimoku strictly, then you would not be entering here. This is only for those who follow candlesticks, purely candlesticks. On confirmation, you would set your stop below the low of this candle. Let's see, JP Associates. Nothing in this stock. I would not buy it or sell it. And let's see, ICICI Bank is the last one I can look at. That was a nice move with the Chicago breakout strategy. At this point, take some profits off the table because again, you have a good distance away from the Kijun, and if you notice that the Kijun is not going to move for the next, I guess, for around 2 or 2.5 weeks here, or until they break about 365. The Kijun is just going to remain flat, which is going to act as a magnet for these prices. So I would definitely take some profits off the table and would get out of the position if it closes below the Kijun. Also, our next course is going to be on the 10th. Let's see. Our next Ichimoku course is going to be on the 10th of February, 6:30 I think p.m. India time. So if you guys are interested in that, let me know. We had a pretty good one this month actually. So the next one is on the 10th of February, and it's an online course, so I just had to sign up. That'll be it.